Run us through the way trade played out today and your expectations for the trading week ahead, given the fact that this is the first full week the market will be seeing after elections.
Yes, the market was up about 1% today, and we saw gains across sectors, the banking sector and non-financials. Concerning the rest of the week, we think that gains are going to be maintained largely. The elections have come and gone, they're relatively peaceful. I think the sentiments towards Nigeria now is positive. And in the context of frontier markets, Nigeria is still one of the best performing this year. We expect that status to be maintained. Well,
results certainly keeping things ticking, and we've been so focused on the banking results, but there have been other major players to have released. Cadbury out with Q1 numbers late last week, turnover up 19%, but we saw profit after tax dipping down 50%. What did you make of the numbers there?
I think the top line was strong, as you mentioned. The bottom line had some challenges. It's better to look at PBT, profit before tax. It was down about 22% because there was no tax charge last first quarter. Cadbury has been having some challenges, I think, most recently with global commodity prices rising, sugar and cocoa to be specific. And Kraft, the parent of Cadbury, even lowered its earnings expectation sometime in February on this same grounds. For the Cadbury result, we think the problems are just not more than just specific to commodity prices. We think the company needs to boost its product portfolio, enter much niche markets in which it can have strong pricing power and be able to compete on margins with the likes of Nestle. That said, Cadbury is embarking on an expansion now for its Bonvita plant. About 8.2 billion naira is to be invested, $55 million in that respect, and that shows that some growth is seen in the trajectory in the next few years for Cadbury.
Of course, growth and expansion just one side of the continuum to consider. On the other, operational efficiency, and many saying that we need to start seeing an improvement there if we're to see a significant enough improvement in the company's recovery moving forward. So what's your take on the kind of operational efficiency improvements we're seeing?
I think the operational efficiency has taken some ground. We've seen margins come up a little, but I think it's more than just efficiency. It's about the company entering into markets in which it can enforce pricing power. I think their product portfolio now is too narrow. If you consider the beverage market, I think Nestle, which has Milo in that market, has a stronger product where it can enforce pricing power. Also, I think you have to it has to leverage on this association with Kraft. I think there are many products that can be introduced into this market where it can really have a strong competitive footing. In my view, that's what Cadbury needs to do to move forward. PBT margin now is about 6% compared to Nestle's over 20%. So you see the discrepancy there. It's not just an operational problem. I think it's more of a product portfolio and finding the right mix that can give the company the right
portfolio. On that note of Kraft's involvement, I mean, we've had Cadbury's valuation to a large extent being driven by M&A and robust growth earnings expectations moving forward. But some traders highlighting that given the lack of clarity on management strategy since Kraft's acquisition of Cadbury UK, that the valuation is too demanding. Do you share that sentiment? Would you be a buyer at 21 naira 80?
Absolutely not. It's trading at 55 times our 2011 earnings, and the growth trajectory we see at this time can't justify that price, and so we're not going to be buying. Even if Kraft introduces some products into the Cadbury portfolio, it has to be introduced in markets that will show that those products will do very well. And so we'll just be sitting and waiting on the sidelines. We have the sell recommendation now on Cadbury, and we expect the share price to pull back.